Hi, hello, good morning. Welcome to your weekly daily outlook for gold. Hope you guys are having an amazing weekend. Um, Starting here with the weekly. The weekly is closing really strong. But the main problem here is that we have a little bit of a zone in here in the 1910, let's say, this area here. And price is not having it to the downside. We all know how hard it is to sell gold and to make some profits. Holding positions, selling gold is very dangerous. Really late in the morning, basically, on Friday, we had a kind of rejection 19.50. And at that point, everybody was tired of fighting in the range. So what's going to happen here depends on how price will trade below the 1910, even the 1908. There's a little bit of a reaction there, but we're gonna talk about here on the weekly. This week is very interesting because as you can see, even with heavy reactions on the dailies, the very next day doesn't find that easy continuation. So yes, it's getting a nasty reaction. But that daily roughly, this kind of basically roughly broke like I will say like 10 pips below the previous daily, not finding that easy continuation to the downside. We have a little bit of an issue there. So we have to be really careful the way we want to trade in this specific area. The one that I want you guys pay attention here is somewhere in this area here, the 1908, let's say. Remember that number, 1908. Closing and price breaking the 1908 may give us a plain and simple continuation to retest all these previous areas of reaction. But the one that makes a lot of sense is how can we target the 1900s? I'm sorry. That's roughly 80 pips to the downside. We need proper volume. We need a proper session, and timing is really important. Really hard to find a consistent move when the timing is not there, especially at pre-market opening. It's most of the times ends in a fake out and prices start ranging a little bit more, and then you know how price behaves during New York session. So here's the thing. That reaction there make me believe, at this point, if I had to be kind of aggressive, that reaction 1912 makes me believe that we're not gonna retest that area if, for any reason, we pull back all the way up to this area here. Like price at market opening, basically, instead of opening with a gap to the downside, breaking that previous daily, if we open with a little bit of a gap to the upside here, and prices start moving again to the upside. Remember, the contention area at this point is the 1910, and anything can happen, like a deep retest of that specific area, the 1930. Depending what we get outside this area, then the bigger picture may change. But until then, nothing really. Just gonna continue there in a possible range, because that's what we had from the left hand side. Look what we had here on this area. Give me 1 second. This area. Let me take this one right here and this one right here, the 1933. You guys remember the 1933? So therefore, if we for real gonna see a possible move to the upside, don't expect, something like the 1930. Wait for price closing, and this is for the weekly, right? There's a lot of things that can happen, and I'm thinking that if somebody will do something this week, is the FOMC minutes, even though FOMC minutes doesn't tend to be with heavy volatility. This plain and simple small moves is nothing crazy. It's not a rate decision day, but anything can happen based on how price is being behaving in these areas here. Hopefully, the upcoming week we're gonna have more volume in the market, approaching to the last week of August as well. We'll probably see more volume in the market. So institutionally, probably we'll see the last week of August breaking either direction outside that 33, or trading below the 1900 for a massive move to the downside. This area here can easily be retested, once we are trading below the 1900s. Other than that, as you can see, heavy areas of reaction in the session in the market. Sometimes for the New York session, a small range is not easy to trade in those specific areas. So at this point, based on the daily and weekly and everything is looking good for a possible continuation to the 1900s, and the 1900 may be the reaction point to close back in this area here and probably continue giving you a give me 1 second, a possible continuation. Give me 1 second. Like something like this, for example. If we get there and reject, close back in the range, this may be the next quarter, let's say. But I'm expecting more volume, more volume to kick in the last week of August, even this upcoming week after the FOMC. I'm expecting more volume to kick in. So from now on, we just need to be really careful, getting in the market, with the easier move possible, waiting for volume in the session and price action. I can tell the story. On Friday was very messy session until price came back to that level again. We all knew that this area here will need to be respected if we're gonna continue trading in a range. But like I said, at that point, everybody is tired of fighting that area. Look what happened here at the 1920s over here, and look what happened here at the 1950. The 1999.50 gave you a close ASAP. The very next candles, I have zero business, my boys, for that continuation to the 1920. And once that candle is engulfing this one right here, it's a must to just start looking for salts. And like I said, no, I think most of us didn't pay attention at that point for a possible trade. But the retest was done to the 1919.50, and since then was a plain and simple continuation. If you had to consider it being aggressive, like the conversation we had on Friday, it's easier to sell the 1950 and have your stop loss on top of the candle. There may be risking whatever 15 pips or maybe 12 pips in there, and basically what you're expecting from that idea is to target the previous areas of reaction. Once you had that previous area of reaction not being respected, price created a fake support in there. The continuation was there, but I'm pretty sure that nobody was expecting that kind of heavy move to the downside. So from now on, this, the weekly, there's a lot of things that can happen based on how that weekly close. I would love to see a plain and simple pullback, no more than this specific area here of contention in 1916. And from there, having some sort of continuation to the downside. In 1 second here, this is this area here, that 1916 area, that probably will be the contention area for a possible continuation and at the very beginning of the session. Something that can close above this area, we already created some sort of a structure down below this zone, and this area here can be used as a secondary structure because we've been trading in this range. So the moment you see price closing back inside this area here, what makes sense is the same, waiting for something that can break and close outside that area, pull back to the 15 or even the 14.50 somewhere there, and from there start loading your buys, because this may be a plain and simple range for the upcoming day. I was expecting more of a bullish close on Friday. It gave me a reaction last minute. So from there, with that information, I know the price has zero business to do that scenario. The worst, the better case scenario here to plan yourself is waiting for something that can go all the way up here and close back in the range. Once you have the the close back in the range, then you will notice that the candles will create a stronger body as a bearish candle, a stronger body, confirmation of resistance, like something like this, resistance, confirmation of resistance. If the next candle break the low, then you know that the continuation is to the downside. And with that information, you can easily target the 1910 or even the 1908. Price going to the 1908, secure the most you can, because from that area, I remember that we had a previous contention area, like a previous area of resistance here, and now this can be your support zone for the 1908 for price go there, close back above the 10, and from the 10, to trade to the 20. That's why if price goes there and give you reaction or a sap, a close back in the range, you need to remember this number here is very dangerous. It's very consistent to create a little bit of a reaction if you're gonna see a continuation to the upside or to trade the range. The other, I mean, the best, like I said, the best case scenario, my children, says wait for a pullback, 1915, fake out, closing back below the 1916, let's 16, closing below the 15, and once you have the closing below the 15, you know that this area here, like 10 or 15 pips outside that 15, will be the stop loss. And with that information, this one right here first, and then this is the very next level. Worst thing that can happen here, the very is remotely possible, that you have a cap to the downside, price close back in the range, and we don't have any form of retest of this area, like price just collecting a heavy liquidity and a massive 4-hour candle that can go there to the 1910, close back in the range, and the body of that candle closing above the 15. At that point, based on this specific level, be aware that the information you're gonna have here is plain and simple. If you get, for any reason, a body of the candle that closes strong above the 1916, most likely you're not gonna have a pullback at all. Well, the very next candle, if this is the scenario, that candle grabbing liquidity for 1910 or 1910.50 or the 1910 flat, to give you a little bit of a retest of that little zone in here, and fake out, and a 4-hour candle information there, the very next 4-hour, for the simple reason that we are trading in a range, may open with little to no bottom wick. So the safest option is waiting for at least one 4-hour candle that can close bullish above the 1916. And if that's the last 15-minute candle before a new 4-hour candle shows up, then you can jump on that on a brand new 4-hour with less stop loss, let's say like 10 or 12 stop 10 or 15 pips stop loss, because at that point the liquidity has been picked up. And once you have a candle looking like this from these specific areas on 4-hour, that'll be pretty much of the liquidity, and that's gonna be the low of the week. And at that point, all you have to do is trade away from this 1910, let's say 1910.50, based on the reaction that we have. The thing is, if I pull up the lower time, so you can see the 1908 here, it's gonna be very, very tricky. Look at the at this area here, the 1908, this area here is very dangerous to look for a possible continuation to the downside. A little bit more than that, this area here, there's 1908.50, but we can call it 1908 because the 1909 doesn't represent much of a business here. The 1908 is the one that is more consistent as a possible contention. That resistance there gave a nice move to the downside, and then once you get the close above that area, you will see the price come back to that area and start creating some sort of contention. So this is the thing that I want you guys to be really, really careful here, expecting that you're gonna have an easy move to the downside. Not really. Price going there, be careful, because we have a lot of contention here, and that can be pretty much it for the low of the weekly, and that weekly candle can easily push all the way up to that 30. I'm not gonna be surprised if at market opening we open with a gap to the downside, but ASAP the gap is getting filled and the continuation to the upside happen. But remember, your job is not a guessing game. You have to work with the information that you have in price action there. Once you have that information, once you have a reaction from those areas, and you have 4-hour candles creating kind of a nice reaction, you're expecting that the very next 4-hour candle will give a nice continuation. For example, if you see a strong body of a candle, this scenario, we don't have it here because the bodies of the candles, they're never close below that area. But if you do have a 4-hour candle that can open with a little bit of a cap to the downside, something like this, see how this reaction happened here in this area. The 4-hour candle still respecting the previous reactions area. This kind of the same scenario. If the very next candle just grabbed enough liquidity and close bullish above the resistance, a brand new 4-hour candle won't give you a little bit of it will give you a heavy pullback. Let's say, look what happened here on that pullback on that candle there. Roughly 15 pips in pullback for something that was like 77 in volume. So that's the candle that if I had to be aggressive to consider a continuation to the upside, I would love to see a 4-hour candle that can grab liquidity close bullish above the 1916. And at that point, if that's the case, grabbing liquidity from the 1910, 1910.50, and that candle goes something like this, I know there's a huge chance that a brand new 4-hour candle here will create a beautiful move to the upside. Maybe not that big, but at least, you know, something that can retest that breakout zone in 1923 or even in 1925. That's gonna be kind of the candle that you may expect at that point, something like this, for example. And from there, you know, if the very next candle have enough volume, we'll give you an entire wick fill, even if that previous candle is looking like a reaction, let's say. But its session is not the best session to trade, first of all, and volume can be very tricky because you tend to have a lot of fake outs, either deviation. So at some point you never know how price will behave, and is most of the times is kind of a gambling because you don't have enough information. But if that's the case, pay attention what price can give you 1910 again, and what price can give you the below that previous daily reaction, 1910.50 as a form of key level, something that can reject that level. Close back above the 1912 or 1913, that can be considered as enough liquidity for a brand new weekly candle, and we may see a little bit of a push all the way up to this 20 and overall the 25 over there. But this one right here, as a form of recap, remember, this can be used, as a secondary structure, meaning price closing back, already created that resistance. The moment price close above this area here, the maximum pullback becomes this area here, the 14 or even the 15 area there. And from there, you know, you can get that picture. This is the picture I'm expecting to happen, you know, on Tuesday, for example, like tomorrow, like today at market opening, just a little bit of range, whatever. But then on Tuesday to retest that 1910 and a possible break above this 15, so we can look for a possible continuation. This is expecting that we're gonna have some sort of price 10 before the FOMC minutes. But this one right here, for example, on Monday, we're not gonna have any substantial fundamental, let's say, for gold, for US dollar. This one right here on Tuesday, yes, we have some sort of heavy fundamentals here on Tuesday, and the one that I'm expecting, if we're gonna range for Monday and Tuesday, we don't have that rally pre-news. This one right here, the FOMC minute, may be the one that gonna move the market a little bit more. We'll pay attention how price behave during the next couple days, and depending what we get in price action, then we're gonna see if it's worth it to consider trading the FOMC minute. If not, you know, we don't need to rush on the process of taking any trade at FOMC minute, because like I said, sometimes FOMC minute doesn't give the best most possible, and you have to be really careful at that point. So that's gonna be pretty much for now, guys. Please stay safe, take care, and I'll see you guys on Monday. Take care.